Let's talk about a $54 billion bailout. Yes, Credit Suisse was bailed out by the Swiss National Bank to the tune of $54 billion. So folks, the bailouts continue. It is very clear that Credit Suisse, being one of the top 30 most intertwined banks, is too big to fail. And you are seeing the Central Bank of Switzerland step in and do what they had to do to the tune of $54 billion. So that crisis is at least averted for another 24 hours, maybe bring some calm waters to Europe region. And yeah, again, remember my thesis, at least currently, is we are in something similar to the S&L crisis of the 80s, which again, the best analogy I have is driving in the fog. There's a little two-car accident, and then things just keep breaking. It's not an event, it's not a fall off a cliff, but it is probably much worse, much more stressful, and again, much, much longer. That is my thesis. Again, the S&L crisis, I asked you to look it up. It took a decade. I certainly hope this crisis doesn't take a decade, but to think it will be over in a moment, a month, a quarter, I think is unwise, and you should be prepared for this. Let's talk about central banks. ECB, Europe. Europe, for the last 2 weeks, has been pushing the idea that they will raise 50 basis points. Yes, 0.5%. The ECB obviously had a near banking collapse or banking failure or banking crisis or whatever you want to call it with Credit Suisse. As mentioned in point 1, it has been resolved, at least for the moment. What would you do if you were in charge of ECB? Would you deliver the 50 basis points to the market you told was coming? Would you go half that at 25? Or, as some people are calling for, would you go 0 and say, hey, wait a minute, let's see where we are, we'll raise next time? Well, folks, ECB raised this morning 50 basis points. They did what they said they were going to do. To me, this was the right answer. If you go into something and the market expects it and you don't deliver, that message, however convoluted it is worse. If you are going to sit there as a central bank leader and say things that basically mean no problem here, and then you are going to wuss out and not give the market what it expects, I think that is a huge red flag. And that is exactly why I believe we will get our quarter point next week. I believe we get a quarter point raise on Wednesday. I truly believe if the Fed does 0, it's worse. Now, I know that may be confusing, but again, I believe if they don't raise a quarter, the market will react to that like, oh my God, I knew there was smoke. There must be a raging fire. If the Fed delivers a quarter, people that see smoke might go, it's just a chimney or it's just a campfire or something else. The Fed doesn't want to increase urgency, increase fear. So my guess, my opinion, my broken crystal ball is we will get a quarter next week. And then we will look at the dot plots, which are going to be wild. And we will look for the Q&A session. Because again, it will be, are we still serious about inflation? Should we still pencil in a quarter? Because as of right now, I don't know if you've seen this, but in the last 3 trading days, people have taken the expected terminal rate from roughly 5.5 to under 4. I personally have never seen 150 basis points move in 3 days. I've been doing this a long time. 150 basis point move is true fear. Fear. So again, lots of things going on. Again, I believe, and I've shared in a couple of millionaire discussions, that I believe the recession started on the weekend. What do I mean by that? I believe consumer psychology was damaged, dented enough where families across the country, near across the world, are going, you know what? We don't need to do that right now. And when they delay and they conserve cash, that is how recessions happen. We won't see real data probably until next month with retail sales, but that is my current thesis, is this weekend with the fear, the threat that maybe your bank deposits aren't yours or aren't whole is a problem. Now, I know on Sunday, the U.S. came out with what I consider the largest bailout ever, right? We have bailed out all the deposits. We need to come in and either charge for that or change the rules or something. But I don't think the average American understands. When you talk about the discount window and you talk about all these things, most Americans' eyes glaze over. All they hear is a bank shut down and my deposits aren't safe. They don't understand that a near blanket statement has covered them, at least for the short term. So again, I believe consumers were damaged over the weekend. You can't undo that, and we will see where we go from there. So again, ECB gave the market what they want. Will the Fed? It is very interesting. I asked this the other day, and a couple of you thought the Fed will cut next week. I think that would be a disaster. Many of you thought they would do 0. Some of you thought 25, and a few of you actually thought 50, which is very, very interesting. 50 is certainly possible. But again, I think it's very interesting to see where we all landed in that discussion. And thank you for participating with the channel. I read all the comments, so thank you, thank you, thank you. So let's talk about Bank of America. I have 2 things that I read about Bank of America in the last 24 hours. Number 1, it is estimated that in the span of 24 hours, yes, that day on Friday when SVB lost $42 billion in withdrawals, it is estimated that basically one-third of those, or $15 billion, ended up in the coffers of Bank of America. Yes, it is clear, and we talked about this last week and over the weekend, this is going to happen, and I believe is still happening, i.e. see First Republic Bank. People are moving their dollars, their cash, from small and medium-sized banks to the big banks. It is a natural reaction. Regardless of what the president says, regardless of what the Fed and the Treasury Secretary says, these mom and pops who have $8, $12, or more $1,000 in the banks, they're like, nope, you're not getting mine. I'm going to go to a too big to fail bank. That is point 1 on Bank of America. Point 2, I don't know if you saw this, we've talked about it before, but the FDIC estimated that roughly banks have $680 billion in unrealized loss because of treasuries and mortgage-backed securities being marked hold to maturity versus mark to market. Yes, that's a big number. Well, somebody did some research and they looked at the balance sheet of Bank of America, and lo and behold, as of Q4, December 31st, 2022, so it may have changed. Bank of America is sitting on $113 billion in unrealized loss. Yes, most of that is in mortgage-backed securities, but some of that is also in treasuries. That is a big, big number. And again, I think you should be able to look at all the balance sheets of the big banks and figure out who has the large unrealized losses, tune of 113. Now what we have to talk about, we must talk about, right? We are a real estate channel, mostly investing, certainly doing the work, obviously. I always say, and it's even in my first book, One Rental at a Time, there are 2 markets you and I must watch. One is obviously your buy box or the housing market. That is a no-brainer. The second is the lending market. And I'm here to tell you that the lending market is going to change. It has already changed and it will change more. The lending market over the next 9 months, the rest of this year, I believe you can count on a couple of things. This is important. 1, commercial. It is going to get ridiculously stringent, tough. Whether you are trying to refi out of bridge debt, whether you are trying to get new debt, you are going to see LTVs move, you are going to see debt coverage ratios, you're going to see everything that can change will change. So if you are in the commercial market and you're looking to buy, all I have to tell you is buy better. Today we talked to one of our millionaires, Jonathan Twomley, who buys large apartment buildings. That will be something I ask him. So look forward to that later in the day. So one thing that is going to change, commercial. Second, let's talk mom and pop, me and you, right? I don't play in the big space. Many of you don't as well, if not most of you. I believe lending for us is going to get tougher and more expensive. Yes, even if you're doing a residential single-family rental or duplex or triplex or quad, fourplex, I believe we are going to see LTVs change. Maybe in your history, you used to get 80% LTV. It would not shock me if it's 75. If you used to get 75, it wouldn't shock me if it's 70. Also, you are going to see the margin or rate difference between owner-occ and investor go up, and you are going to see fees increase. It is very clear to me that powers that be want to charge investors more so they can help the third bucket. The third bucket, folks, will be first-time home buyers. My belief is first-time home buyers are going to get all the love this year. They're going to get rates coming in. They're going to get lower fees, see mortgage insurance. There are going to be down payment assistance programs. You are going to see a push to increase home ownership is my guess. You are also going to see rates come down for first-time home buyers. It would not shock me, and I believe I said this yesterday, that rates on 30-year best credit, 20% down, Mortgage News Daily, I think is the one we look at daily, will be under 6% by April 15th. That's a month away. Let's be clear, April 15th, 2023. We'll see. I have about 30 or 31 days to see, but these are all things going on. Rates will go down, but for investors, it will be harder. Most of you have never invested in a landscape like that. Michael, the rates are down. It should be great. Let's go. Well, lending is harder. You need an extra 5%. You need more reserves. Just be prepared. Get creative, learn seller financing, learn all these things, but just be prepared. Don't be shocked when you can't get a loan and you have a 750 credit score because your reserves or seasoning or whatever. It is going to be harder. Lenders will be pickier. And then finally, what is the outcome of banks not lending as much? They are going to do less business. You are going to see GDP. Yes, the real estate market with less lending will directly impact GDP. It will go down. In fact, Goldman Sachs yesterday said because of what is going on in the regional banks, and regional banks make up 50% of lending. Think about that. Regional banks make up 50% of total lending volume. Regional banks are in a little bit of trouble if you haven't seen the news lately. So if you lose that important part of our economy and they lend less, it is going to reduce total consumption, aka GDP, gross domestic product. Goldman reduced GDP by 20%. 20%. Now, I use that number because it's shocking. Now let's give you the real numbers. They lowered GDP for the year from 1.5% to 1.2, aka a 0.3 reduction, which is a 20% reduction if I wanted to create a scary headline. But they've taken it from 1.5 to 1.2. I believe we will actually go negative. I believe the recession started last weekend, but we shall see soon. Stripe, I don't know if you saw this, but Stripe had to do a down round. Stripe is a private company. If you don't know, they were last valued at $95 billion in their last round. They just did a round to I don't know, basically help employees with some tax implications. I don't understand all the ins and outs. The important part is the round now is $50 billion. Brian, thank you very much for the super chat. I appreciate you. That's very nice of you. But yes, folks, Stripe had a down round from, I want to make sure I get the numbers right. Yeah, $95 billion 2 years ago to $50 billion. That is a down round. You're going to see lots of down rounds in capital stacks and all of this going on. All right, so let's talk about this. I've already hit GDP. GDP is going to go down. Regional banks, 50% of lending, not as much. Simple arithmetic. Oil. Oil is screaming recession. Screaming. I haven't checked this morning. Yesterday, I think it was about 68 bucks. Oil is screaming a recession, and important for inflation, oil is in everything. So again, inflation, as I talked about yesterday in some of our millionaire discussions, will accelerate to the downside because of a consumer-led recession. 10-year. 10-year has crashed. The 10-2 inversion, remember, it was just last week. I think it was on Wednesday. It might have been Tuesday. We talked about a near record yield inversion. I think it was 1.08 or 108 basis points. The 2-year was 108 basis points above the 10-year. That was a record except for 1981, which was like 300 basis points or 280 or something like that. But a bad trend nonetheless. In the last 3 business days, it is now down to, last time I checked, 54, or it has been cut in half. One sign to remember is when the yield curve de-inverts, right, goes from steep to less steep. Historically speaking, that has been the sign of start of a recession. Don't know if it's true this time, but we shall see in the coming weeks, months, and quarters ahead. Again, the 2-year dropped 150 basis points in 3 days. I believe I said that earlier. I have never seen that. It may have occurred in the early 80s before I was old enough to really care about money. But wow, 150 basis points in 3 business days. Again, the market now is pricing in over 100 points or 100 basis points of Fed cuts this year. I still don't know. I again believe we get 25 next week. I still think we get 25 the week after, or the meeting next, and then they're done. Again, for us in the real estate game, for investors in general, it is important to get to the terminal rate. We might be at the terminal rate next week. That is absolutely possible. But again, I think we got at least one more. And again, if they don't raise next week, I think that is a sign of bigger and bigger problems ahead. And then unemployment claims. Every Thursday, we get the weekly unemployment claims. Remember last week, they went up to like 211. They've been revised to 212. We had been stuck under 200,000 for like 9 weeks. Well, folks, we're back below 200,000. We just had a new weekly unemployment claims of 190,000. Again, it is my belief that this has to break over 300,000 eventually. We are clearly not there. Again, we had 1 week over now 212. This week is at 190. I'm sorry, it's 192, not 190, 192. I missed that. So, lastly, I have lots of questions about my outstanding buy box discussion or deep dive next Sunday, the 26th, a week from Sunday. A couple of things that you've asked. Michael, I want to buy it, but I can't make it. I'm on a trip, I'm at an event, I'm at church. Can I buy it and then you will send me the recording? The answer is yes. Anybody who buys this, again, there will be maximum 100 of you. What my intention is on Sunday, execute the event, answer all of your questions, pull up your buy boxes, tweak, manage, build the spreadsheet. I then will save the video. I'm going to ask my team to cut it up into little chunks. I will then load it and I will send all 100 of you a link to it because you paid to be there, you will get it. Second, if you can't make it and we were sold out, I expect to be sold out today or tomorrow. So buy it today or buy it tomorrow. If you are trying to buy it and it is sold out, I will, again, download it, cut it up, post it, where you could buy it for the same price, $47. So if you can't make it, you don't have to, but if you want to, just to be in the first 100, you can. Then, will I do this again? Because I think there's a lot of value in the live interaction. My hope is yes, but I want to wait and see how the day goes on Sunday the 26th, 8 to 10. If it is fun for me and if it's valuable for the 100 people, I will absolutely repeat it sometime in the future. So that is my plan for this. Again, we only have, as of right now, 42 spots left. 42 spots left. You can find the link in the last 2 or 3 day daily financial news. I will try to post it again today on this one. But again, this will sell out probably worst case by Saturday. It wouldn't shock me if a lot of you that have been thinking about it buy it today and it's sold out today. We shall see. In the end, folks, do the work. No gambling. Don't rush. Take deep breaths. Don't panic. Again, you are in this. And then lastly, there's a Warren Buffett saying that when the tide goes out, you see who's swimming naked. I have tweaked that quote ever so subtly. I believe when the tide goes out, it is your job, it is my job to look on the bottom of the ocean or the river or whatever you want to call it and look for diamonds, gold, platinum, whatever you want. When the tide goes out, all that stuff that was hidden could be treasure. So that's what I do. I do not swim naked. If you watch this channel, you know I've refied debt, I've stacked cash, I don't gamble, I only do great deals. So if the tide goes out, I am not swimming naked, but you can bet your ass I will be looking on the bottom to see what gold bars, what diamonds, and what assets I can buy for cheap. So that's what I challenge you to do, folks. Do the work. Get prepared. Get the metal detector, whatever you want. Get ready to look for deals. Only great deals. Don't gamble. Nothing average. Shoot, nothing good. If you are only going to do a good deal, keep your cash. Only great deals. If you want to know how to do that and understand great deals in your buy box, well, that's what Sunday the 26th is all about. All right, folks, take care. Bye. Oh, no, let's do this. I almost forgot. We got 2 people to congratulate. I forgot yesterday. Benjamin and Kim. Benjamin and Kim, congratulations for your first deal. This is your golden tickets. Benjamin on top, Kim on bottom. You are getting your golden tickets. They will go out in the mail. I should have mailed these yesterday. I forgot to give you a congratulations. But there you go. Benjamin and Kim. Take care, guys. Bye.